Okay, welcome back again. I am not the best YouTube live streamer in the history of ever because this is like the third time I've done it, and I totally messed up because I didn't change the title of the video. So I'm back. Everything's updated. We're gonna go on. Again, just answering questions from anybody who's joining me live. I'd be happy to help you get started or answer any questions that I can. My apologies for messing up my YouTube live stream, because I blow at YouTube live streaming, so what can you do? In the vein of a successful live stream I did several months ago, I'm going to be going back through comments from other videos, expanding on things I want to talk about, answering questions I never got a chance to answer, and of course answering any questions that come up while I am streaming live. So if you're joining me, please feel free to ask some questions. Let's see. I'm going to go back through a few comments here. So my Robinhood Unlimited Day Trades video got really popular. Apparently people really hate the pattern day trader rule. There's not much you can do about it, really. The unlimited day trader rule is pretty hard and fast. There's not a lot of ways to get around it. A lot of people have been pointing out in the comments that my way of getting around unlimited day trades is cheap or cheesy or it doesn't work. Any way of getting around the pattern day trader rule is really just a band-aid fix. There is no way to get around it that works great, quite frankly. So if you're looking for a way to get around the pattern day trader rule that is perfect, you're not going to find one. It just doesn't happen. It doesn't exist. That rule is there for a reason. There's no real good way to get around it. End of story. There are several ways that you can work around it, and I present one of those ways in this video. And I think, judging by the number of likes and dislikes, which is, as last time I looked, sort of like 50-50, people are kind of upset. I think people are looking for like a guaranteed way around the pattern day trader rule where you can just day trade back and forth as fast as you want, and there just isn't one. That's why the rule exists. There's no way around it. It's a rule. So there's a couple workarounds, but they're not that great. And then I had a guy say that he's got more than $25,000 and still is stuck with the rule of the PDT rule, the pattern day trader rule, which supposedly doesn't affect people with account balances over $25,000. I don't know. I've never traded with more than $25,000. I wish that I had, but I haven't. So quite frankly, all I can tell you is that it's not supposed to, but maybe there's something going on with your account, if this sounds like you, where it's still causing it to be flagged. I don't know. You'll have to ask Robinhood. Excuse me. Matt wants to know if options contracts and short positions will be in the allocations for personal capital, and I don't know because I don't run options contracts or short positions. I would imagine not. That sounds pretty complicated for personal capital to try to track. I don't know how they would track that. What they can track is the net account value of your different accounts. So if you have different brokerage accounts linked to personal capital, at the end of the day or whenever personal capital syncs, it's going to sync up to the total account value, and that's going to take into consideration ETFs, stocks, short positions, everything. So I don't know. I haven't tried it. I suspect it doesn't track those individually, but I'm not sure. Maybe Matt, if you've had a chance to figure that out, you could let us know, because I don't have an account with short positions to test that with. Jackson says, Acorns video, nice video, but is Acorns worth investing a lot of money? I don't know. Acorns isn't bad. It's sort of like in the middle of my list of investing apps. It's sort of neither here nor there. Would I invest a lot of money? But I don't know what a lot of money is. I think a couple hundred, maybe a couple thousand is appropriate for Robinhood, but I probably wouldn't be sitting on a Robinhood account with like $10, $20, $30, $100,000. Maybe like $5,000 at the most, but once you get past that, if it were me, I would want to have more control than Acorns offers. So I probably would jump out of Acorns at that point. That's just me. I think Acorns is actually really good for helping you put away money, because it takes those like remaining balances between whatever your dollar amount is, and it automatically invests those. You guys already know that drill. You know how it works. But I think that's what Acorns is good at. Acorns isn't good as a powerful investing platform, so I probably wouldn't have a ton of money sitting in there myself. It should be common sense that you have to pay back money if you lose it in a margin account, says another user, and I agree, but it's not common sense, and a lot of people don't know that. So hopefully that comment and my videos have helped some people make sure that they understand that fully. And I agree with that comment. It should be common sense. IDK Man is confused about why turning off instant settlement helps get around the unlimited day trade rules. And it's been a while since I made that video and I looked into it, so to be totally certain, I feel like I need to go revisit that whole concept. But turning off instant settlement, I think, yeah, I'm not even going to talk about it right now. I'll go back into the video and like double check why that was part of it. It's been like a year and a half since I made that video, and I seriously don't remember the process right now. Would I recommend going aggressive if you are new to investment? That is a good question. Technically, I think me recommending any type of portfolio allocation is going to be sort of on the line of like violating some financial rules. So SEC, if you're listening, I'm not recommending anything to anyone. So first of all, I can't recommend anything. Second of all, aggressive is probably appropriate. Like, I would use an aggressive allocation if I am a younger investor, I have a long time horizon, I am willing to stomach some short-term gains and losses. Those types of things are indicators that you should be using an aggressive portfolio. If you're more concerned about overall growth and you're willing to handle short-term bumps in the road. But I can't recommend anything to you, so I didn't recommend it. If I have $100 to buy stocks, I use $50 to day trade. The money I make from that trade will need to settle, right? Yes, it will. And the normal settlement window is T+3. Even though Robinhood automatically will kick the money into your account instantly, they're giving you money. The settlement hasn't actually happened yet. That's what my understanding. But can I still use the remaining $50 to make more day trades the same day? Yes, you can. It's still in your account balance. I think a lot of people, I've seen a lot of questions and comments about this that are really confusing. So if I have $100 in my Robinhood account, I open my Robinhood account, I have never bought a stock in my life, and I transfer $100 from my bank to my Robinhood account. There's $100 in that account. It's in cash. It's just sitting at the brokerage. Well, not technically, but you can think of it this way. It's sitting at Robinhood's like headquarters. They're just holding on to my $100. Now, as soon as I tell them to buy something with it, it's gone and it's now been deployed in an asset. It's locked up in an asset. So, if I buy $50 worth of stock, the other 50 is still sitting in cash, hasn't been deployed. It's a cash position is what it would be called. A lot of people would call it a cash position. So, yes, that $50 is still tradable. That first $50 that you bought some stocks with, now that's stuck for a little while until you can trade out of that position. That's how that works. I don't know. I don't think that's too complicated. It's not too difficult to understand. If you have $1,000 and you use $333 to buy stock A, you still have $777 left, or $667 left to buy the next stock. If you buy $333 again of stock B, you've got the remainder $334 left ready to be used. It's just sitting as cash. You've got those 2 stock positions, and then you still got your cash position. Can I explain IPOs? Leon, IPO is initial public offering. Maybe so the concept of an IPO is relatively simple to understand. So Leon, if I don't dive in deep enough, tell me what part of an IPO is confusing to you. I might be able to explain a detail that matters to you. But an IPO is the first time that a stock is made available to purchase to the public. So a couple of years ago, Snapchat's IPO dropped. And that was the first time, the IPO, the initial public offering, that was the first time that the general public could buy stock in Snapchat. An IPO, you know exactly what an IPO is. You're just getting started on Robinhood with IPOs. Okay, sweet. So, I mean, the concept is pretty straightforward, right? Like, it's not too hard to understand. When it comes to investing, like, where do IPOs belong in people's investing strategies or in your portfolio? I don't usually participate in IPOs. They're like, if you go back and you look at a lot of stocks, like pull up a stock chart and see what happens in the first week after an IPO, it's insane. Now, if you have a really strong conviction that Snapchat is going to perform well, and their IPO is at $50 a share, and you're like, okay, I know in my research and my convictions, I know everyone I know uses Snapchat, like I know it's going to do good, but all the critics are saying it's going to tank after offering blah blah blah. Maybe you go buy an IPO and you just sit on it because you're convinced it's going to shoot off the charts. Or maybe you short an IPO because you're like, okay, I think within the first week, everybody's talking up the Snapchat IPO. Everybody's talking about it. It's going to go up right off the bat, out of the gate. I'm going to short it because I think that within a month or so, people are going to realize that maybe it's not as good as it was. So you could short that IPO. IPOs are a time when there's a ton of potential for rapid movement in a stock price. And so a lot of people will take advantage of IPOs for that. There is good money in, I notice a lot of people's not the only Chinese IPOs. Can you expand on that, Leon? I'm not sure I understand. The real money is on IPOs. I noticed a lot of people's not the only, oh, you notice the money's in a lot of people's IPOs, not just the Chinese IPOs. I see what you're saying. Okay. Yeah, no, there's good money to be had in IPOs. I mean, if you had bought in at the Amazon IPO and you were still sitting on it, you would be just rolling in the dough, and I wish that I had done that. So far be it for me to sit here and say that IPOs are not a good thing, but they're certainly unpredictable. I think we can say they're relatively unpredictable, but they can be fantastic money makers. So I think that's the trade-off, though, right, Leon? Like, if you call it right, there's tons of money to be made in an IPO. If you call it wrong, there's tons of money to be lost in an IPO. But you got to risk it for the biscuit, as they say. Let's see. What other questions do we have outstanding from other users here? If I buy a stock at 3 p.m. and I sell it at 10 a.m. the following day, is that considered day trading? And the answer is, I believe, if I remember right, no, because that day trader window switches over from market open to market close. It's not necessarily a 24-hour window, so if you buy it like noon, you have to wait till noon the next day. It's like you sell at market close, you can then buy at market open without violating the PDT rule. But you notice a lot of people don't want to deal with Chinese IPOs. The problem with Chinese IPOs is actually getting a hold of them, and it's not like impossible to do, right? And it sounds like, Leon, you probably have more experience with Chinese IPOs and IPOs in general than I do. I'm not much of an IPO guy, but sometimes it can be tricky to actually get involved in an IPO. Can you short stocks on Robinhood? I don't think that you can short on Robinhood. You can use a short ETF, Leon. There are ETFs out there that will short for you. You can like double inverse the S&P. So if the S&P goes up, you're going to go down. If the S&P goes down, you're going to go up by twice whatever that movement is. So that's one way to short using an ETF. In fact, I've done that before myself. Let's see, short ETF. Let me see if I can find a ticker symbol for you real quick. So a double short ETF, SDS is a ticker symbol. Let me look up SDS. SDS. Okay, so SDS is a ticker symbol for ProShares Ultra Short S&P 500, which essentially does the inverse of whatever the S&P is doing. So if you wanted to short using Robinhood, an easy way to do it would be to use an inverse ETF. So if you've never heard of an inverse ETF, that's the way to do it. Probably the easiest way to do it, but then you're going to pay the ETF fee, right, which is it's going to cost you something. However, the other way to do it would be with options contracts. With puts and calls on option contracts, you could short doing that. But then you're going to pay commissions on those options contracts. You're going to have to do it through like E-Trade or something. And they're going to require you to go through training and this and that because you have to have an account that has access to options contracts, and they don't grant access to that unless you can like prove that you know what you're doing, which is not hard to do. And you should get some education before you do it anyways. Who's the best people to use to short stocks? It doesn't matter. You can use anybody. There's a few like discount brokerages out there that have cheap commissions on options contracts. So look for a cheap commissions on brokerage with cheap commissions on options contracts if you want to do a lot of shorting. Or like I said, you can just use an inverse ETF, which you can do through Robinhood if you want to just short the whole damn market as a whole. So if you think the market's going to flip, just use an inverse ETF. Let's see. Somebody said I look like a shark in the comments. You guys should be nice. There's a comment here actually with somebody said they saw a person making an M1 Finance portfolio with 32 monthly dividend stocks so they can get paid a daily dividend. That seems like a lot of work, but kind of cool. It's one way to make your dividends come in all the time, I guess, if you can find 32 dividend-paying investments that you want to bother with. If you change to a cash account, can you ever go back to Robinhood Gold? The answer is no. If you change to a Robinhood, or if you change on Robinhood to a cash account, and I think it pops up on your screen, it'll say like, this action is permanent. It literally means it's permanent. It's done. Once you switch to a cash account, you're toast. Okay, you're not toast, because switching to a cash account can be a good thing. If you choose to switch to a cash account and you want to stay there, that's the way it's going to be. Have I ever considered opening an app like Robinhood or something similar, like actually creating an app myself? Good Lord, I would have no idea how to do it. In fact, the red tape of starting a brokerage like that would blow my mind. Have I ever considered opening an account on an app like Robinhood? I actually have a Robinhood account. I have an M1 Finance account. I have a Stash account. I have an Acorns account. So many accounts. By the way, never do that. It's a lot of paperwork, and when it comes time for tax season, it's a bitch. So the only reason I did it was to test all of the apps and help you guys out. But it's a real bitch. It's a pain in the ass. Try not to open any more investing accounts than you really need. The paperwork is not something you want to deal with. Can investing on our own, as an example, Vanguard or Robinhood app stock market, outpace a 401k plus match at work or a Roth IRA? Question. Or they really can't unless you have a lot of money to invest. That is quite the question. Can investing on our own outpace a 401k match at work or a Roth IRA? Well, let's ask the first question then. can investing on our own outpace a 401k match at work? And the answer is no. Well, the answer is very unlikely. The beauty of a 401k match is that your employer will contribute a matching amount of cash to whatever you're putting in. So if you put in $2,000, your employer will match up to 3% or whatever, which is great. And I think it's 3% of your income. So you're like, I'm making $100,000 a year. I'm going to contribute 3% of that to my 401k. Your employer is going to match that. So that would be $3,000. That would be a total of $6,000 a year. So you're getting $3,000 worth of free money. Now, I've never worked for an employer with a 401k match. In fact, I've never worked for an employer with benefits at all because my life blows in that way. So I don't have firsthand experience with this. This is just what I understand about it. So if any of you do have a 401k match and I'm saying that wrong, just throw something in the comments. But anyways, 401k plus match is essentially a percentage of free money from your employer, which is great because you're never going to find that in the stock market. Nowhere in the stock market is someone going to give you free money to match your investments. So it's pretty hard to outpace. So I'm going to say it's very unlikely to outpace a 401k match. Roth IRA, can investing on your own outpace a Roth IRA? Well, you can invest on your own in a Roth IRA. You can do that with M1 Finance. You can do that with E-Trade. Actually, I have a Roth IRA account with E-Trade and M1 Finance, both. And you could otherwise have a Roth IRA account through like a financial advisor. They could open one for you. And investing on your own would probably be pretty likely to outpace that because you're going to be paying your financial advisor. So yeah, it's pretty likely you could outpace a financial advisor on your own just because you're not paying them any portion of your assets, which is always a good thing. Well, it's always going to save you more money. Let's see, there's a couple questions here. Oh, it's not really a question. Jose just put in $2,000 on Ford, $3,000 on Wendy's, and $3,000 on AGNC. I don't know what AGNC is, but I would be nervous too because that's $8,000, and that's a pretty decent amount of money, no matter who you are. Well, okay, for anyone who's probably on this live stream, $8,000 is a pretty decent amount of money. Leon wants to know how to do taxes with Robinhood. Oh, by the way, Jose, good luck. I really hope that doesn't come back to bite you in the butt. I don't think that it will, but I wish you the best of luck, and I really hope that goes well because I'd be nervous too. How do you do your taxes with Robinhood? At the end of the year, Robinhood's going to send you an email, and they're going to say your tax forms are ready, blah, blah, blah. What I did is I just downloaded those tax forms, and then I went into, what did I use? Like TurboTax or whatever. And TurboTax was like, literally you just click the box, and it's like, did you have any investments? And I was like, yes, I did. I had an investment. I had lots of investments. I had to do this like a dozen fucking times because of all my different accounts. And they're like, okay, what does it say on form or box 10 of form 83G part B section 10 subsection A? And I mean, it's difficult to follow sometimes because it's sort of convoluted. But as long as you just follow the directions, you just type in whatever numbers Robinhood gives you into your taxes. I wouldn't do your taxes by hand, like on paper, if you're doing investments. Either have someone do the investments for you, like a CPA or a CPA firm or something, or do them online with a account or a software that knows how to do it for you. Because I don't know, I would fuck it up if I tried to do it myself. So just follow the directions on TurboTax, and it's not that hard to do. It just takes a little while. Yeah, so that's all. Let's see, where was I? I was reading some comment. Oh, this comment about outperforming. So anyways, I think that investing on your own is very likely to outperform almost anything. What I would say, though, is about the 401k match, actually, if anybody's listening to this and you have a 401k match at work, double check with your HR department or whoever is in charge of your investments and see what you're invested in. Excuse me. A lot of times when you sign up for a 401k at work, if you don't change the investment when you sign up for it, they'll automatically put you in what they assume is the investment you want to be in. So they're like the 401k may have 20 different investment options for what you can be invested in. They may have a Vanguard ETF, they may have Voya investment, they may have an S&P investment, they may have a large cap, a small cap, whatever. They're going to have all these different things, but if you never opt into any of them, they're just going to put you in something. And usually there's a default, like when you look at your paperwork, in fine print somewhere, it's going to say, like, if you don't choose anything, we're going to put you in this money market account that earns like essentially $0 freaking dollars, which is a total waste of your time. So then you go to check that, just go to your HR department or talk to whoever's in charge of your investments at work and be like, hey, what are my investment options? They'll send you home with a sheet with a list of investment options. And you can come home and go on Google or come over into my comments and be like, what are these different investment options? How do they work? Which one should I pick? I can't recommend which one you should pick because the SEC will get upset at me for recommending things because I'm not a financial advisor. But I can give you some advice on how to do some research and decide which one you actually want. Leon says a Vanguard index fund is actually good to have in a 401k. If you do have a good selection of Vanguard funds in your 401k, I would totally agree. That would be awesome. Those are some of the best funds that you can get in a 401k. As far as quality of the fund, whether or not they're a perfect match for you and your investment strategy, I can't say. But I do agree that Vanguard funds are great. And if you have them in your 401k, that's a nice thing to have. Let's see. Going back through comments for why can't I buy NNLX on Robinhood? When doing a search, it doesn't show up. The company, local to me, invented something fantastic, and it's awaiting FDA approval, and I want to buy it. For some reason, Robinhood does not have this company listed. I don't know. Let's find out. Let me look at it. It's probably not on... oh, isn't NNLX a mutual fund? Hang on. Let me find out what NNLX is and find out why it's not on Robinhood. Nanologics Inc. Nope, it's certainly not a index fund. Faster microorganism test results. Okay, well, if it's an individual stock and it's not on Robinhood, that means, oh, it's because it's listed currently for 2 pennies, which means that Robinhood isn't going to host it. I think it's, what is it? There's something about, let's see, Robinhood stocks not listed. Stocks available on Robinhood. Let me look up in the Robinhood Help Center why this is. I remember why you can invest in over 5,000 stocks, including U.S. equities and exchange-traded funds. Okay. Does not support select OTC equities. So this is probably falls into OTC, which is over the counter. When stocks get down to a really, really tiny trading value, they become OTC, which means they're traded on an exchange. Something about red slips and bullshit. I don't know. It's been a long time since I researched it. But essentially, if you're looking for a stock that is over the counter or OTC, you have to go and buy it on the OTC bulletin board, which is a totally different exchange. So you have the NASDAQ and the other one. Can't think of it. Anyways, you have several different exchanges. The NYSE, the New York Stock Exchange, the NASDAQ, and the NYSE. Yeah. And a lot of stocks are traded on there. But when you get into stocks that are like red slip stocks and really, really tiny face value stocks, they're not going to be on there. They're going to be traded over the counter on the OTC bulletin board, which I've never messed with, actually. I've never messed with it. It's kind of like the scary, dark little alleyway where like stocks are dealt. Somebody like opens up their jacket and they're like, you want to buy some stocks? Nah. Want to buy some watches? You got to go to the OTC bulletin board, and I've never been there. I just heard it's kind of a dark and scary place. So if you want to buy NNLX, you're going to have to go there, and I wish you the best. Tell me how it goes. I've never been down the dark and scary alleyway. Oh, there. Oh my goodness. I'm trying to load old comments and it totally just glitched out. If you're just joining, go ahead and throw your questions down in the comments. I'll be on for a few more minutes. I'm going back through old comments and videos, answering questions, and I'm also answering questions in real time, so throw them in there. Omnicron says that they're not going to mess around with margin trading, too much risk for them. And that's sort of the thing too, isn't it? Because there's nothing wrong with margin trading, and there's nothing wrong with shorting or trading options contracts or Forex, but some of them have inherent amounts of risk, and it may not be a good choice for you. So there's nothing wrong with the old classic like index fund buy and hold. Nothing wrong with that. If you ask me questions like this one, quote, I have IVV through no commission, should I get VOO as well? If you ask me that question, I cannot answer it. If you're asking me for a recommendation on what to buy, you're not going to get an answer. I can't answer it, legally speaking. Where do I start with funds or something less risky than stocks? That is a super big question. So as I talk about this, I'll try to keep it as concise as possible. Feel free to ask follow-up questions, but I think you're kind of headed in the right direction as far as funds being less risky as far as diversification risk. So there's lots of different risk out there: timing risk, market risk, diversification risk. But funds specifically solve the problem of diversification risk. When you buy a fund, you're getting a bunch of different stocks in one pile, in one basket. And where you start with that, it's pretty simple. You just want to choose a brokerage like M1 Finance, Robinhood, E-Trade. I mean, you could even go to your local financial advisor and open an account with them. They're going to open that account with a brokerage as well. So the first thing you need is an account with a brokerage. The second thing is that brokerage needs to support whatever funds you're buying and selling, like Robinhood, or is it M1 Finance, I think, doesn't, or didn't last I checked, they don't have mutual funds. So if you were looking for mutual funds and you go to M1 Finance as a brokerage, you're going to be kind of let down because they don't have it. So do your research. If you're looking for ETFs or mutual funds, double check what that brokerage participates in, make sure they've got it. And then all you got to do is open your account. Watch out for account minimums. So some places will have an account minimum that says like you have to have at least $2,000 to open an account. So if you don't have $2,000, you'll be kind of toast. The other thing you'll want to watch out for is if you're looking to buy a ETF that costs a lot of money, you'll want to open an account with a place that has fractional shares. A lot of places will force you to buy a whole share of an ETF. So if that share of the ETF costs $200, you're going to have $200 to buy it. So if you only have $50, you'll be toast unless you open an account where fractional trading is supported, and then you can buy a fraction of a whole. So you can buy, you could buy with 50 cents or $50. It doesn't matter. So if you're looking for ETFs and you're looking for fractional share trading, M1 Finance, I know, does it. They have retirement accounts now and brokerage accounts. So I would look, Lucas, I would look at M1 Finance. Try that. See if it has what you're looking for. If you have more questions, let me know. I'll answer a couple more questions for you. Actually, it is cold in here. I don't have the heat turned on, and it's like down to 50 degrees up here in Michigan. Trying not to turn on the heat because that costs money, and I'm a stubborn, money-saving little hermit. Actually, I don't mind. I like the cold. I like it when it's like 65 to like 75 degrees with like a nice breeze. But it's actually kind of colder in here right now than I really want it to be, and I just haven't bothered to turn on the heat. And also, I'm the only one in the house right now, and it's kind of dark in here, so I think I need to turn on some lights and turn up the heat. Oh, you're from Europe. There is, what is it called? Do you know in Europe what brokerages, I guess, yeah, so you can't use M1. Do you know what brokerages? Have you heard of any good ones? Because I get this question all the time from people in Europe. Oh, nice. You came through Mint. Was it Toro, I think? Toro is one that I hear about. Toro stocks. Sweet. Myrtle Beach vacation. I went to Charleston a while ago. I really liked... Oh, Toro. It literally took me to the company Toro. I don't want that. I want Toro brokerage. eToro, my bad. It's called eToro. I will drop this in the comments really quick. So if you're from outside the US, check out eToro. I really don't know much about it. I've looked into it a couple of times. Oh, hey, eToro is now available in the United States. It literally says, like, on the screen right here. Let me share it with you. Oh, man, switching screens. Struggle. Here, this is eToro. Haven't used it myself. I can't really recommend it because legally I'm not supposed to recommend stuff. But I would say you should look into it and do your own research on eToro. See whether or not it works for you. And apparently it's now available in the US, so I should probably look into it and do a review about it, I guess. Apparently that's now a thing that I have to do. Whoops. Messed that up. Okay, where was I? I was reading through some comments. Oh, Acorns referral. Somebody was saying, Jason was saying that the Acorns referral wasn't working, and I think they changed the referral for a while, and they stopped paying me to refer you guys. So if you're going to use Acorns and you sign up with my link, I don't get any money anymore, because Acorns was like, you've made too much money by referring people. We're not going to pay you anymore. I was like, thank you for that, Acorns. Actually, I got screwed out of a handful of my affiliate referral deals, which is how I make enough money to actually do best investing apps on the website and do all the reviews. And several of them have a cap. So if you make like $500 by referring people, then they just stop paying you for referrals, which I'm like, okay, well, that's awesome, but now what? Because now it's not really hard for me to make it worth my time to be here doing these videos when I probably should be at work making real money. But so be it. I guess that's just part of online business. Which app would I recommend for someone living in Belgium? So here's another question, outside of the US investing apps. I wish that I knew more. In fact, yeah, I'll save this and upload. Wow, I will save this and upload it onto the stream so you can go back. You might be able to go back while I'm talking. I think you can go back and look through older parts of the video. But I'll make sure it's uploaded. Check back next week. It should be up. So anyways, investing apps outside of the US, I get so many questions about them that I've actually thought about hiring people from outside the US to review apps for me because I can't do it. I'm kind of tired of opening investing accounts anyways because the paperwork is insane. So I was thinking about hiring people and paying people to if they're using some app from Belgium, I'll pay you $20. Write me a review so I can post it on the website and then it can help people. But I haven't done that yet. Maybe I should. Can you cancel investments on Acorns without penalty? Yes, you can. The Acorns just charges you monthly. As far as I know, there's no real penalty for pulling out of your positions with Acorns. Is buying stock more than 3 times considered a pattern day trade flag? It depends. If you buy and sell within a 24-hour window, or within a day window, more than 3 times in any 5-day period, you will be flagged as a pattern day trader, I believe. I know I should start my own app, but I can only Leon, I think I would just, it would not be worth my money. You couldn't pay me enough money to do that because the amount of paperwork and getting registered with FINRA and the SEC and hiring people to program the app, that sounds like a nightmare to me. I don't think I would ever enjoy that. What was I looking up? PDT rules. Pattern day trader rule. Okay. So here it is. I have linked to this more times than I can say. If you have a question about pattern day trading rules, Here's your answer from the government organization that made the rule and enforces the rule. Don't ask me, just go to the SEC and read the rule. All you gotta do is read the rule. And then you will know. It's pretty black and white. Pretty straightforward. This dude's in the process of saving 30 G's so they can trade without restriction on the PDT. And again, I think that's the best way to do it. I don't think trying to get around the pattern day trading rule is a great call. It's really just a workaround, and it's never the greatest. So just save up enough money, invest enough money to not be restricted by the PDT rule anymore, and then you don't have to work around it. People seem to be all up in arms. Like, half of my comments are about the pattern day trader rule. Jeff Rose has some interesting stuff. Let me check out Jeff Rose. Is Jeff Rose a like financial guy? Does he talk about finances or what? Jeff Rose is a CFP in Illinois. Also an actor. I think maybe they're two different people. Oh, is Jeff Rose the guy from Good Financial Sense? Because I've seen a lot of stuff with him. I'm Jeff. Are you Jeff Rose? This dude is just Jeff. Just Jeff. About Jeff. Check YouTube for Jeff Rose. Alright, let me YouTube Jeff Rose really quick. Another guy that's really good is... oh, what's his name? Like David Stein or something like that? David Stein. David Stein. Let's see if I can find him. Yeah, Money for the Rest of Us by David Stein. So if you want somebody else to listen to who knows way more than I do and is fantastic, David Stein is really cool. He's got a really good podcast called Money for the Rest of Us. He's got like his own website and stuff. He's got his whole shindig going on. But he knows what he's talking about. And if you go back in his podcast to like podcast number 1, he starts at like uber basics, talking about like economic theory, and then working his way up through like monetary theory, government, monetary control, up into stocks and investments. His early stuff is really cool, and I love it. He only has 1,000 subscribers on YouTube, so go subscribe to him, because David Stein has taught me a lot, and I should probably refer a few people over to him. He's a good guy. He knows what he's talking about. Yeah, here, I'll link over to David Stein. Go say hi to him. Tell him I sent you. Your wife's from Michigan, offered a huge house. Turn it down. People are very different. Yeah, no, northern people are definitely very different than southern people. My sister lives in Tennessee, and they actually just had a baby, so I have a niece now. And it's definitely different down there. And I will say that Nashville is a scary place to drive. Very scary. Alright, now that I have been sufficiently distracted, I have no idea what I was talking about. Can you avoid the monthly fee on Robinhood Gold if you pay back the gold? Which is kind of a comical way to put that, I think. If you pay back the gold. No, you can't. When you sign up for Robinhood Gold, it costs you a monthly fee, and that's it. You're just stuck with that monthly fee. So if you pay back the gold, you're still stuck with it, even though you tried to pay back your pirate booty. Tim Skies is good. Tim Sykes. Yeah, how have I heard of him? I've heard that guy's name before, and I think I have listened to him. Oh, yeah. This is the dude that's like always sitting on his Lamborghini or whatever, and like he pops up on my Facebook feed all the time. And I'm like, bitch, get off of my Facebook feed with your Lamborghini. He's always like showing me his Lamborghini. As if that, oh, this is the dude I read through his like penny stock. He had like this free book about how he learned how to trade stocks back in college. That was actually kind of an engaging read. And I had fun reading that. But I can't get over the fact that he's always sitting on his stupid fucking car. Like, stop showing me your car. What about gold and silver in general as investments? Actually, I'm going to link you to, so I don't blabber on, best investing apps, gold. I did a huge write-up on, okay, never mind, I can't even search for my own shit. Best. I did a huge write-up on a investment strategy that I actually use, I'm still using and testing, that involves trading gold to counteract market swings. Where is it? Okay, so here, I'm going to link it in the chat. Here's a link to my article, shameless plug, and it also has a video to go with it, about a concept that I had. I'm not recommending it to you. I'm still using it. I'm still testing it. This is an idea that I had for a trading strategy, and the general concept is using gold, moving into positions containing gold to offset potential market swings. So if you want to read through that, it's a pretty like step-by-step write-up, so I don't have to like word vomit at you right now. But what if you don't have Robinhood Gold and it still forces you to sell your stocks? I have come out of pocket for my own stocks for 3 months and have never bought gold. I simply got stocks, raised them, and traded them for the more pricey, better-looking stock along the way. I'm not sure what that comment means, actually. That is confusing to me as a comment. And second of all, I am not aware of any way, if you have bought stocks using your own money and you're not using a margin account, I do not believe that a brokerage can force you to sell those stocks. Correct me if I'm wrong, or if anyone knows anything more than I do. I'm 99% sure that's correct, that a brokerage can't force you to sell your own stocks. If you buy them with your own money and you want to ride them all the way to zero, any brokerage is going to let you do that. They don't really care. What is the minimal amount of gold and silver to avoid a commission? Commission is going to be based on the brokerage you're using or the app, not on the amount of gold or silver that you're buying, as far as I am aware. This is a good comment. You suck. Why you make a review app if you say about every feature that you don't use it or don't use it well, don't do it then. That's a good idea. I'll only review things that are perfect. I will never review things that suck, because things that suck don't deserve to be reviewed, obviously. What, the physical amount of gold and silver to avoid a commission? I guess I don't know what you mean. You mean like buying physical gold and silver and like hiding it under the mattress type of thing? I actually don't know anything about it. I've never tried it. You'll have to let me know what you find out. I think I don't know, you would have to find someplace local, I would guess. I actually don't. Listened to a podcast one time where someone actually used like physical, tangible gold and silver as part of their investments. And I remember them talking about having, it sounded like a difficult process trying to find a company that would actually like essentially deliver like actual gold to you. But I've never tried to do it, actually. I don't know. I don't think you can just go to the bank and ask for straight up gold. I don't think that will work. But I don't know. I've never tried it. I do know, though, if you're going to invest for apocalyptic situations, you should buy guns, bullets, alcohol, and cigarettes. Because according to Fallout, the video game, that is like the only thing that matters. Oh, you have to report gold and silver to authorities if you live in Europe? That seems kind of sketchy, because then they'll be like, whenever the end of the world comes around, someone's just going to like raid the government folders and be like, oh, this guy's got 1,000 pounds of gold. Let's go find them and kill them. Yeah, and some caps for sure. You always got to have caps. That's very important. And lunch boxes to make lunchbox bombs. The market is going to crash between 2020 and 2021. I am not going to contest that, but I would be curious to know how you figured that out. Oh, only if you buy it through the government channels you have to report it. I see what you're saying. Okay. I feel like most people, if you're buying gold and silver to hold on to physically, most people like probably want to keep that secret, right? Because that's part of, if you're buying physical gold and silver, it's sort of like a worst case investment, almost like an end of the world type investment. I feel like most people are going to like bury a safe underneath the floor with like a trap door or something. Lots of guns and bullets in South Carolina. Yeah. Wait till you come to Detroit. Just make sure you wear a bulletproof vest if you go within like 10 miles of Detroit. And put some armor plating on your vehicle. Somebody's complaining about tax reporting on Robinhood, saying just steer clear of it. I didn't have a problem with tax reporting last year with Robinhood. I thought it was pretty simple and pretty straightforward. Yeah, call Robocop. As far as my experience with Robinhood tax reporting, I thought it was pretty easy to do. So if you're worried about tax reporting, I didn't have a problem with it. Again, just download the tax files that they send you, type in the numbers into TurboTax, and you're done, if you're in the US. Say I buy 300 shares of stock, then I sell 100 shares, wait an hour, sell another 100 shares, and then at the end of the day, sell the last 300 shares. Is this 1 or 3 day trades? I bought only once but sold 3 times. That should be 3 day trades, as far as I know. I've never tried that exact process. Maybe I'll try it with... Maybe I can do that with my Robinhood, because I think it keeps track of how many day trades you've made. I guess I could go do that with something on my Robinhood right now and find out. But I don't really feel like it. So go try it on your own Robinhood, and then tell me. Somebody's given a thumbs up to Acorns. Also, does the money go... Okay, I just opened an Acorns account and decided to go with the aggressive portfolio. Can you access the money at any time to use, say for large purchases, without penalty, since this isn't a Roth or a 401k? The answer is yes, you can. It's a regular brokerage account. However, see it, thanks. You have to wait for the money to settle out. So when you sell, you'll have to sell out of your positions in Acorns, and then they're going to transfer the money to your bank. So if you wanted to like buy something today and you try to sell out of Acorns to get the money to do that, it's probably not going to work. You're going to have to wait a couple days before it goes, because they're going to have to sell it, then they have to transfer it to your bank, then it has to clear and settle at the bank, then you can use it. So it's probably going to be like 3 to 5 days before you get that money actually in your hands. Leon, apps like Robinhood probably already are superseding E-Trade and Schwab and TD Ameritrade, honestly. The difference, though, I think, is that a lot of, I guess, more traditionally educated or practiced investors are probably using those platforms like E-Trade, Schwab, and Ameritrade. Whereas a lot of like millennials, myself, and people younger, even, you know, I guess a few years older than myself, but like the generation that's using those phone-based trading apps are the YouTube generation. The people who are on YouTube here, the people who are on their phones, the Instagram users, people who are attached to those phones are using it. And it's like, it's modern, it's sleek, it's easy. It really appeals to the, like, I want to click a button on my phone and have some instant gratification crowd. But there's a lot of drawbacks to it, too. It's never going to have, okay, never mind. It may eventually have the same power, but it's certainly nowhere near as powerful as most of those platforms. You can't trade options, you can't do other stuff like that, so. I agree that Stash sucks. In fact, actually earlier this morning I did a video about how to outperform Stash, which I need to edit and and posts. I haven't liked Stash since it came out, and I've been kind of trash talking Stash for a while. The one good thing that Stash has going for it is that the app essentially makes it, they sort of like guide you through without telling you a lot, which is bad because you can get invested without having much education and actually knowing what you're doing. But it's good because it lowers the barrier of entry. It makes it easier for people to get started without a huge amount of knowledge, which I think a lot of people watching my videos are struggling to gain that knowledge. You're feeling like you don't have enough knowledge, or you need more knowledge to actually get started investing. And Stash kind of helps with that. But at the same time, they're essentially charging you their fees in order to repackage and resell you investments that you could get very easily otherwise and for free, which I don't like. And the level of knowledge that you need to do the same investing that Stash is doing is not much. You don't need to know a lot to do what Stash is already doing for you. So I don't know. I think Stash is good for like, I've never done this. I want to get started right now, very simply. But if you then, over the next 6 months or 12 months, you start to learn more about investing, pretty quickly you're going to learn more than Stash can help you with. You're going to be more knowledgeable than that app is really good for anyways. So at that point, you might as well just ditch Stash and start doing it yourself with M1 or Robinhood or something free. That's my opinion on it. So yeah, you've got to wait for that money to settle out as far as can you use money from Acorns or Robinhood to like, well, Robinhood may be a little bit different because they essentially like front you their own money. But you still have to wait for it to hit your bank and then transfer. So if you want to buy a new couch for the living room and you like try to transfer money out of your Acorns, it might take a couple of days. So you may want to kind of time that appropriately. Since VOO is a share class of their original index, you can go back to 1975 and the total stock market almost as long. Total stock market is more volatile because it has a bigger slug of smaller stocks. Yeah, I would say that's like uncontestably accurate information. There's not much I really have to say about that. Is there any good app for trading outside of the US in Argentina? I don't know what's good in Argentina. Okay. So if you're just joining, investing questions go in the comment box below. I'll answer them when I see them. Otherwise, I'm answering old questions. I think Robinhood's eventually going to get more options. I mean, they've steadily been trying to add things since they've come out, and like M1 Finance too, they've done a good job of adding new features. I wouldn't be surprised, you know, especially Robinhood's become so popular, and they're probably making a shit ton of money. They're going to keep adding features. They want more people. They want more people doing more trades so they can make more money. I mean, the simple fact of the matter is they're making a lot of money. They're not making money off of you because it's free. Well, they are making money off of you, but they're doing it in a different way. They're making money on the back end. What is the best portfolio level? Obviously, aggressive is more risky, as I can lose money, but I plan on buying a nice car in a few years, less than 3 years, and might want a decent-sized down payment on that vehicle. This is a really, really good question, especially for new investors. How do I invest? What type of allocation should I use if I want to make some money in the next 3 to 5 years? I want to buy a house, I want to buy a car, but I want to put my money to work in between. What do I do? Great question. I'm going to go with the Dave Ramsey answer here. And if you've never listened to Dave Ramsey, he's another financial talking head. But I'm going to go with the Dave Ramsey answer here and say that you probably shouldn't. You probably shouldn't invest that at all. Historically speaking, it's actually quite likely that the market could turn down for 3 to 5 years or even more. So if you need that money in the short term, probably don't invest it whatsoever. That's it. That's really all I can say about that. And if you're gonna invest it, conservative, I guess, would make sense because it's got, you know, you've got less likelihood of a massive negative turn. But I just really wouldn't, because the likelihood that the market stays down for more than 3 to 5 years, if it turns down while you're in it and you need that money, the likelihood is pretty good. So you're essentially gambling at that point, and I don't think that investing should be gambling. Now, if you want to do some trading and you're willing to take some massive risk, that's fine. That's totally different. But investing and gambling should be totally separate, in my opinion. I got a thumbs down on my video for the fact that you have to wait 3 days for the money to settle, and you still can't trade more than 3 times a week. It's a waste of time. I'm sorry that the pattern day trader rule exists, but I can't stop it from existing. All I can tell you is how to work around it. That's all. Can I put 15 grand cash and loan 12 grand from Robinhood Gold to day trade? So essentially that would give you 27 grand to work with. I don't know what their requirements are. There's different levels of Robinhood Gold that give you more gold, or essentially access to more margin capital is really the correct term there. Buying power, I think, is what they call it. They call it buying power. But essentially, you are just opening a bigger line of credit, is all it is, with Robinhood. And I don't remember. Let me look it up. Here, I'll see. Robinhood Gold. Oh, tiers. It's called tiers. That's like the first thing that comes up. Tiers, Robinhood Help Center. Oh, dizang, that's expensive. Okay. Jim Cramer really fill you in on stocks as going to make money. Jim Cramer is an interesting guy. I'm not much of a Jim Cramer fan. I feel like he shouts at me all the time, and it like scares me. I'm like, oh, Jim Cramer, tell me about investing. And he's like, stock, 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 bah! I'm like, oh, you scared me, dude. Now I can't think straight. Anyways, Robinhood Gold tiers. Check this out. I'll switch over. So here are the Robinhood Gold tiers. How do I do that? There it is. Here's the Robinhood Gold tiers. It costs $25 a month to have access to the $6,000 tier of buying power, which is essentially a $6,000 line of credit. So this is just an example of how downgrading works, I guess. But I don't really want that. I want to know how much they all are. Gold buying power. Maybe it's under here. This is just risks of gold buying power. Okay, well, whatever. I guess I'm not going to find the greatest. But if you want to borrow $15,000 from Robinhood, it's going to cost you $75 a month to do that. So you had better be making more than that, and probably significantly more than that on a regular basis to make it worth being able to borrow that. But at the same time, I guess, let's do some math here really quick. On $15,000, if you manage to make 2%, you made $300 anyways, minus 75, you've made $225 in profit. So all you need to do is make 2% in your return for that month, and you've made $225 in profit by using Robinhood Gold in that example. So I guess maybe it is worth it as long as you're confident that you can pull a 2% return or better. We could do the math and figure out what the minimum return would be, but I'll leave that to you. I have a question about TradingView versus the broker. If the broker doesn't have an API, which means a way for the brokerage to communicate with TradingView, the price on the two charts won't match. Since there will be a pip difference in price, a pip being, I think, 1,000th difference, or 100th, maybe it's 100th. is it still okay to use TradingView for your chart needs and your broker to execute orders, even though there will be a slight price difference between the broker and TradingView? That's a thoughtful question, and this person obviously understands some of the niche intricacies of this question. If you're trading on like 1 minute time intervals, you want as little lag as possible, so you should probably be executing trades from something that is directly linked to your brokerage. Ideally, you're using a charting software provided by your brokerage. Like TD Ameritrade and E-Trade and all that stuff, they have like in-house advanced charting software that you can use that's directly linked and like instantly executes. So if you're trading at like 1 second or 1 minute intervals, do that. Just do that. If you're trading at like 10 minute, 5 minutes, hour, or day or week intervals and charting off of that, then the time lag difference between charting using TradingView and then trading in your brokerage is totally fine. I don't think it's going to make a difference. So if you're in the minute to second intervals, definitely the time difference is going to make a problem. Because when you see an indication that you need to buy or sell, you need to execute like right now, because a lot of times you're literally working off of 1 second intervals. But that's pretty advanced stuff, and you guys probably aren't doing that anyways. Be surprised at what the caffeine in the coffee can make you do. That's why Jimmy is always wired up. Yeah, I don't know. Maybe he drinks too much Java. I get pretty wired if I drink a couple of coffees too. Somebody said they knew that Robinhood Gold was too good to be true. Thanks for clearing it up. Yeah, I don't know. I think, again, in my video, and a lot of people have commented on this, the reason I made some of my Robinhood videos, especially about Robinhood Gold, is just because I don't think that they, especially initially, I don't think they did a good job of explaining what it is. And I think it was misleading a lot of people. So I'm glad that I was able to help a few people with that. What would you recommend for a Roth IRA in the battle of the ETFs comparison video, VOO, VTI, and SPY? I don't remember. Go watch that video if you really care. Here's a link to this video where I compare 3 ETFs. And in the video, I decide which one is actually the best. So go watch the video. I don't remember. As far as it pertaining to a Roth IRA, I don't think it really matters. That's it. The downside of fractional shares is that you can miss out on dividends due to rounding. It would be pretty rare and easy to avoid with a calculator and awareness, but for a novice, it could be an issue. I don't think it matters. A rounding issue on dividends is going to be 1 share of a stock, and even if that share is $100 and your dividend yield is 3%, that's $3, whatever, over 12 months. It's not that big of a deal. And there's nothing you can do to stop it, especially if you have dividend reinvestments anyways, because it's going to be fractions of fractions of fractions going back in. There's no way to stop it. So, I don't know. That sounds a little bit too nitpicky to even worry about. But I'm not disagreeing with the fact that it could happen. Can I do a video of Drive Wealth? Maybe. I don't know. I've never heard of it. And I'm really tired of opening new investing apps because I have so many goddamn accounts that it's boiling my noodle. I wish that I could. Maybe I'll just find other people that already have these accounts and pay them to do reviews for me because I don't want to open any more accounts. I need a nice hat to complete my Abraham Lincoln look. Yes, I do. Alright, I'm almost done with my tasty pumpkin spice latte, and then it's on to more work for me for the day. So if you have any more questions, pop them into the comment box. I'm going to read a couple more questions, and then I'm going to be out of here. Don't have a lot of people watching, but I get a lot of questions. I've had like 4 people watching my live stream. Thank you. 4 is a lot. If you were all here in this room with me, it would feel like I'm talking to a lot of people. But yeah, I do get a lot of questions, in my videos in general, in the comments sections, but I also filter out. I moderate all of the comments, so I get rid of all the trash comments and spam and people who are just being assholes. So my comment sections actually become helpful. So if you watch one of my videos and you read the comments, you're probably going to find useful comments from other people instead of garbage, YouTube freaking comment garbage. I have been trading in the Indian market for the past 2 years, looking to buy a paid charting software, contemplating between TradingView Pro and Metastock. Which one should I go for? I've never used Metastock, but TradingView is fantastic. I have loved TradingView ever since I first started using it. So I guess I would really have to dig into Metastock to answer that question. I can't imagine it being too much better than TradingView. So if you're looking for a charting software, TradingView is where it's at. Here, I'll even link to my TradingView review. If you're looking for some charting, TradingView is where it's at. If you do have and maintain 25,000 plus in your Robinhood Gold account, can you literally make unlimited commission-free day trades, like 100 a day, or is there some limit even with 25K? I know on my account it does have a dollar amount where it says day trade limit. I don't know if this is just because I don't have the 25K. I don't know. I've never traded an account with 25K. I wish that I could. If you guys want to send me 25K, I will test it for you. That offer stays on the table indefinitely. So somebody just send me 25K and I'll test it and we'll find out. But to the best of my knowledge, once you pass the account minimum threshold for Pattern Day Trader, you can literally make as many trades as you want. So there was a ragey comment here about TradingView from 5 months ago, which is actually really comical. And then I responded and I was like, I've never actually had a problem with it. And the dude came back and he says, sorry about the ragey comment. I edited to mellow it out a bit. Have a good one. Which is kind of funny. I wonder if maybe there was some sort of problem there that got resolved and then they realized maybe the ragey comment didn't need to happen. So again, probably the most comments that I have ever gotten, and like the most views too, really, are on the Robinhood Unlimited Day Trades, how to get around the Pattern Day Trader rule video that I made. It was an relatively early video in my channel, and it has gotten tons of traction because people really hate the Pattern Day Trader rule and want to get around it. And I'm pretty sure that in the video I explained that you have to wait for settlement, but maybe I forgot to explain that, so I apologize if I did. But I know that I went back and added it into the comments and into the description and everything else. So even if I forgot in the video, it has at least been very well explained in the description and all of that stuff. So just pay attention to what I am writing in those descriptions and stuff. If you think that I missed something, I probably went back and added it. I try to, anyways. If I see a bunch of comments where people are like, you forgot this or you said something wrong, I try to always go back and point it out in the video descriptions. People raging about knocking on free apps. Yes, I know that they're paid for by advertisements. That's it. That's all. You own multiple funds. Why? Do you have the option to invest in securities other than mutual funds? ETFs are cheaper to own. Why would you own a mutual fund such as NASDAQ when you could buy an equivalent ETF? QQQ tracks the NASDAQ, yet the expense ratio of NASDAQ is about 100% higher than QQQ. Stocks are cheaper to own than ETFs. ETFs give average performance of the stocks contained in the security. Some stocks underperform. Why not buy the best stocks within an ETF? I had to approve your comment, I think, because it said assholes. You're welcome to say assholes in my thread as much as you want. And yes, people will be nozzles. I call them douche nozzles. Is that like a common word? Is that a common thing that people say? Or is that a phrase that just me and my buddies say? Douche nozzle. Apparently it's a common thing because there's a meme for it. Oh no! What have I done? No, I should not have searched that. There is an actual device called a douche nozzle. Okay, so it is a real thing. It's very common. All right, no more. Don't Google that ever, ever. Oh my god, that was funny as hell. That's staying in the final video for sure. Okay, so anyways, this guy's comment. Yeah, so if you go back and you watch my personal capital review, I have a few mutual funds and stuff in there from my E-Trade account, which was actually my very first investment account that I ever opened. It took me a long time to do the research, figure out what to buy, and it's actually performed really well since then. And I know that I could probably make some better decisions now if I were to... oh no! I moved my comments. I could probably make some better decisions now if I were to go back and redo some of those purchases. But it's been performing great, and I don't really want to get rid of them, so deal with it. But yeah, I do agree that ETFs have a lot of advantages, and most of the comments there from this person were actually quite helpful. So there's not much to disagree with there. If I maintain a $25,000 portfolio and day trade 5,000, that means my settled funds would be less than 25,000. So essentially, we need 30,000 to day trade 5,000 daily. Yeah, so if you're at 25,000 and you buy some stocks, and those stocks decline in value, your total account value could slip under 25,000. And if that happens, you would then be re-subject to the pattern day trader rule. It's based on your account value, I believe, not just your cash value. So yeah, if you're right on that 25,000, like if you literally deposit $25,000 and then invest in something, and that investment declines in value, your account slips under $25,000, you are now re-subject to pattern day trader rules, as far as I know. I've never tried that exact procedure and seen what happens, but that should be the way it works. Somebody says, God, this guy is so fucking ugly. That's me. Hi. I was wondering if you would recommend getting started on some VOO through Robinhood. It seems like it would be an easy way to get exposure to the S&P 500, but my only concern is that you have to do more work once you are ready to exit with taxes, etc. Do you recommend a brokerage, Fidelity, or going with Vanguard directly? It would appear that there would be more fees with going direct or with a broker, but I was wondering if it would be manageable with being a novice investor and just buying the VOO directly every month on Robinhood. Leon, I don't think Robinhood can. It's a rule that's set by the SEC, not a rule that is set by Robinhood. Every brokerage has to adhere to the $25,000 PDT rules, as far as I know. It has nothing to do with Robinhood. It has everything to do with the SEC. And I believe, furthermore, I believe that it's there to protect new investors with small account values from essentially vaporizing themselves. So would I recommend VOO through Robinhood or VOO through a traditional brokerage like Fidelity, or going straight through the fund family like Vanguard? Going straight to Vanguard is going to be better than going to a brokerage as far as dollar value, because those brokerages are probably going to charge you some extra fees and commissions. Whereas if you go and you buy a Vanguard fund straight through Vanguard, they're not going to charge you anything at all. There are no commissions on your trades. but I think you still have your yearly fees and whatnot. So that's probably going to be better than going through a brokerage. But Robinhood doesn't charge commissions anyways. So essentially with Robinhood, you're still just going to be getting charged the fee of the expense ratio of the fund. So it's going to be no different than going straight to Vanguard. With Vanguard, though, I think you can set up, because Robinhood and Vanguard both, you're going to be having to buy full shares. You can't buy fractionals. But you could use M1 Finance, which doesn't have commissions, allows fractional trading, and allows automated investments. So M1 Finance would be essentially the equivalent of doing the Vanguard thing, except you can buy fractional shares, so you'd be able to deploy more of your capital more efficiently, quicker. If you caught any of that, I hope it was helpful. But essentially what I'm saying is that as long as the way you're investing doesn't cost you a commission to buy the ETF, it's probably just as good as investing straight through Vanguard. Can I use these investing apps in Portugal/Europe? I don't think any of them have opened in Europe. eToro, I just found out earlier in this video, has now opened in the US. They were in Europe, but now they're open in US as well. But I don't know of any US apps that have transferred to Europe. eToro started in Europe and has transferred to the US, so now it covers both. But I don't know if anything goes the other way. I don't understand why you can use a cash account under $25,000 as a loophole in the system. Is there any way you would get flagged? No, because you just got to wait for it to all settle. As long as you follow my suggestion in the unlimited day trade rule video, you can get around it. It's annoying and it's going to take longer and you have to wait for settlement periods, but yes, you'll get around it. You'll be fine. But it's not a perfect solution. Just get a big enough account value and then you're free of the PDT rule. Anybody notice a trend here? There is a shite load of comments about the pattern day trader rule. Everybody wants to be a day trader, apparently. Or just don't be a day trader and then you don't have to worry about it. But that wouldn't really help a lot of people, would it? I love the idea of making a pie inside of a pie, but I can't get the combined pie box to show up. This is kind of a niche question. We don't really need to cover this. But in M1 Finance, you can make a group of investments called a pie. So you can be like, okay, I've got Apple, I've got VOO, and this is my pie called Casey's Investment Pie. And then you can take that pie and like, whoop, stick it inside of another pie. So you can make pies within pies, which could be used effectively to achieve certain things, but it could also just get really confusing. I have a video all about how to organize and make pies with M1 Finance. Leon, I can't explain M1 Finance. And is it really that good of an app? Actually, M1 Finance has been and remains my favorite investing app. That doesn't mean it's the right investing app for everyone to use. It just means I think that for me, it's my favorite, and I think that for the vast majority of people in similar investing situations, it's probably the best app as well. And let's see, I will try to pull up my video and link it to you so you can check that out, because the video is going to be a lot more thorough than I am. All right, so while I'm doing that, I'll talk a little bit about M1. So M1 Finance, they are a commission-free, no minimum brokerage that runs on web and phone, and they work entirely around the concept of pies. And pies essentially are just like a pie chart. So you can create investment pies, and you say, okay, I want 20% of my investment portfolio to be Apple. I want 30% of it to be VOO. I want the other 50% to be General Motors. Okay, so now you have a pie that's made up of 3 investments, each with a certain percentage, and you can make that as many as you want at different percentages. You can go down to 1%, 2%, 10%, 50%, whatever you want. And then, of course, like if an ETF is part of your pie, then that ETF also has different investments inside of it. So it can get pretty confusing, and you can actually use other pies as part of your pie, like I was mentioning a minute ago. So it can get a little bit complicated and a little bit confusing, but the basic concept is you just set a percentage of your entire portfolio that you want to be different investments, and then you add money to M1 Finance, and it automatically divides that money up based on your settings for your pie. So if you put in $100 and you have 20% of your portfolio in Apple, then $20 is going to go to Apple. And it invests it using fractional shares. So even though Apple costs $300 or whatever it costs, you can still invest $20 at a time. So your money gets to work instantly. They don't charge you anything to use the app. You don't have to have an account minimum, like $5,000, whatever. You can invest $100 and just start with that. And it's totally automated, which is great. I think that offers a lot to people. There's a big tendency, I know for me too, with like Robinhood. I log on to Robinhood and it's like, oh, this stock is like dropping, or this stock is going up. And I'm like, ooh, I want to buy some. I buy some of that. And then without actually doing any research. So with M1 Finance, you do some real research, you pay some attention, you build your pie, and then you sort of automate it. And you can check in every 6 months or every 12 months or whatever. So that way you're not in there every single day making little tiny trades, and that may end up, maybe not being the best idea ever. I know for me, if I kind of set it and forget it and manage it every 3, 6, or 12 months, I tend to make better decisions than if I'm on there like while I'm taking a poop in the bathroom, like scrolling around and like buying and selling shit. I get myself into trouble. M1 Finance, do they give a dividend every month or every quarter? They pay dividends out based on when your investments pay dividends out, I believe. So if you have in your investment portfolio, if you have something that's paying a monthly dividend, it's going to come out every month. If you have something that's paying a yearly dividend, it's going to come out every year, vice versa. So you can kind of get it set up. However, I'm going to link you to some of the videos I've done on M1 Finance, so you can just check those out. If you go into my channel, there's an M1 Finance playlist, so all of my M1 Finance videos are sort of there in that playlist, and you can look through them. Let's see if I can scroll back and find like that original M1 Finance video, because that'll be the most helpful as an introduction. April of 2017. Oh my goodness. So old. How do I get to the link? Show me the video. All right. Apparently I can't get to my own video. I just go to the comments and like click on one, or oh my gosh, this is infuriating. All right, fine. Let's go to YouTube and look it up. You guys are going to end up finding this video through my channel faster than I can find it and link it to you. Okay. My channel. I know how to use YouTube, everyone. Obviously. Obviously. Okay, playlist. Where's my M1 Finance playlist? Okay, here. Just have the whole playlist, because apparently I'm incapable of finding the video. There is my M1 Finance playlist. Just use that. Watch all of those videos, and then you'll know all of the things about M1 Finance. They've changed a couple things since they first came out, so that older video I might be spouting out some stuff that's not correct as of today. So double check some of that, but it still remains. It was a really good investing app, and it was my favorite. And then they did some stuff to make it even better, namely like going totally free. I don't think they used to be totally free, but they went totally free after they came out, which is sweet, and it made it even better. So already good app got made better, was made better. I speak English, obviously. Trying to load more comments. I'm going to read 2 more comments, and then we're going to end the stream. So now's your time to ask questions if you have any more questions. And then I'm going to straight up peace out. How does assets under management affect portfolio turnover ratio? That is a big question. Effectively, it doesn't really. Portfolio turnover ratio is a percentage of the assets under management that are bought and sold in any given 12-month period, if I remember right. So essentially, because it's a percentage, it's not like assets under management doesn't really affect it. If you have a really tiny amount of assets under management, comparatively, that percentage could go up as long as the dollar amount that was traded remains exactly the same. I guess technically that would affect it, but it's unlikely that that would be the case. So assets under management doesn't really affect portfolio turnover. And portfolio turnover ratio is only really important if you are trying to minimize. What did you invest in on M1 Finance? I've invested in a lot of stuff on M1. I have a brokerage account and a Roth IRA on there. If you watch through some of those M1 Finance videos, you'll see some of my investments just through the videos. And a lot of them are experimental. But one of the ones that I have right now is I have a Pi setup that pretty much automates my buying and selling of a gold ETF to offset market changes, which I mentioned earlier in the video. So I do that on M1 Finance. A lot of my money is still in E-Trade. I've just left it there because it was my first investing account. And quite frankly, I don't mind it, and I still use it. Honestly, I kind of like having the stuff in E-Trade so that I don't mess with it. The majority of my investing money is still in E-Trade. And it's nice because it keeps me from fiddling with it, which costs me money when I fiddle. Whenever I mess with stuff, I lose money. When I sit down and come up with a strategy and a plan and do it and just stick to it, it works out, or seemingly works out significantly better than anytime I have access to tinkering with it. Because as soon as I have access to tinkering with stuff, I just start messing it all up. But that's just me because I have zero self-discipline. I'm the kid that eats all the candy in the jar because I can't stop myself. Okay, so here is the last question of our live stream from an old comment. When you withdraw money, can you select which stock you pull the money from in regards to M1 Finance, or is it from the entire pie that the money is withdrawn from? No, you can't choose which stock it comes out of. If you have $100 in M1 Finance and you withdraw 50, it's going to withdraw that as a representative portion of however your pie is allocated. So it's going to pull 20% out of one thing, 10% out of another thing, 5%, 40%, so on and so forth, whatever your pie may be created like. So no, you can't really just be like, okay, I want to just sell this one thing. Although, I believe very recently, M1 Finance introduced the ability to buy and sell individual stocks. So with that considered, there may be a way to do it now. I haven't looked into that really deeply in the last couple of months. So if you know of a way to do that, or you've used the new feature on M1 Finance for buying and selling individual stocks, drop a comment below and let us know. Leon, if you want a lot of dividend stocks, there's a couple of guys that I often enjoy reading called the Dividend Diplomats. These guys are kind of cool. Sometimes their articles and stuff are a little bit heady, and you may need to sort of read through a lot of their stuff to really start following what they're doing. But they pretty much have a monthly update of how their dividends are doing, and I think their goal is to basically just make enough money off of dividends to retire on dividends alone. So the Dividend Diplomat guys would be a good group of people to follow if you're interested in really cranking up your dividend investments. And I actually am really interested in that as well. So maybe I'll do some videos on that coming up here, and then we can all stay in touch about dividends and talk about the world's most riveting subject, dividends. Bring that subject up at a party. Everyone will love you. Okay, friends. thanks for watching. Again, I'm going to try to do more of these videos. If you're watching this after the live stream has ended, thanks for watching. Leave me a comment, give it a thumbs up if you would like to see more live streams. I really enjoy being able to answer questions directly for you. It's fun. It's an easy way for me to give more value back to the viewers without me having to guess at what you want to see and just make a video and then post it and hope it helps somebody. Instead, I can just go live and you can ask me questions directly, and that way I don't have to just make random videos. But I do still enjoy making random videos. I would like to get back into it. The cold Michigan winter is coming up here pretty soon, so hopefully I'll be able to make some more videos over the winter when I'm stuck inside freezing my balls off. So peace out, everybody. See you, Leon. Thanks for being here pretty much for the entire stream. And everybody who catches the video later, I will try to get some more live streams going, and I'll try to schedule them in advance so y'all can see them and predict them and schedule time out of your days to make sure that you're here with me watching me drink coffee.